get the whole story.
I'll come to the two problems that have really affected our mechanism in Kenya. Those who default traditionally should just have a lower score. And there are people, there are lenders who are interested in lending to low-risk customers at higher interest. They make their, if they can guarantee themselves that this guy is going to pay anyway, perhaps by putting in stronger terms of credit, maybe asking for security. Some people specialize in low-risk customers and they make their money there. So the problem that has caused, that the bureaus have suffered is twofold. It's caused by two factors. One, there are lenders who have definitely mistreated defaulters. They have simply said they don't want to see them. To be fair to those lenders, they have a risk appetite that does not entertain, defaulters. So, every lender defines their risk appetite. There are lenders who are interested in low-risk customers, and maybe we have not spoken a lot about that. And so blacklist, I say, doesn't exist because there are lenders who would be interested in who has a bit of a low risk and I can charge a higher interest because nobody else is going to be excited about lending to them. So if I offer credit to such people at a high interest rate, I'll make my money and probably a higher percentage of them will default. So I've taken the risk on that. And those who will pay, because they really need credit, they have been defaulters, but they will pay. I'll make money because I'll charge them higher than I would normally do. So the other problem, so problem number one are lenders who do not educate their consumers. They simply say, I've seen your credit report, you are blacklisted, out you go. That's not the attitude that we should simply say, my risk appetite, draws the line at say 600 credit score. And because you don't meet that, try the next lender. That is really the spirit. It's not that you're blacklisted. The other cause of the problem that bureaus have, the image of the bureaus, is from borrowers who are over-enthusiastic not to pay loans. And they are in this economy. I have worked in what is now called KDIC, Kenya Deposit Insurance Corporation, which takes all the collapsed institutions. And when you look at the loan book of all these collapsed, there are more than 20 in the last, especially in the 90s. If you look at the loan books of all these collapsed institutions, you will see common names across. They are called serial defaulters. They go to banks, they borrow with no intention to repay. And at that time, you should compare the 90s and now, that you don't see a lot of bank collapses today. Because in the 90s, there was no credit reference bureau. So these lenders would entertain a borrower, not aware that they have defaulted in 5 other banks. So I saw that. I saw how the commonality of defaulters, spreads across. Now, we should be very grateful that we introduced CRBs because depositors lost their money in the 90s, huge amounts of money in those 20+ institutions. That's not a common phenomenon today because banks check to see whether you're a serial defaulter before they lend. And so we don't have a lot of people losing their money today, and we should give credit to the CRBs. All right. Now, I was making the point that borrowers who have that tendency are the ones who are spoiling the name of the CRBs because they would love a situation where a bank cannot check whether you have defaulted elsewhere. I'm not saying everybody who has a bad impression of CRBs is a serial defaulter, but those ones have fueled the image, those category of borrowers who are interested in cross cross borrowing and cross defaulting have fueled this image about CRBs being terrible. Okay. Now the government is doing its best, and we are about to talk about its efforts now to try and balance between the interests of the lender and the interests of the borrower. And I think that's where we should be going.
Definitely. That's very important. I mean, credit repair framework, it's one that, first of all, in the campaign season, it was brought up very much because CRB listing was one of the huge issues. In the campaign period, once the government came in, they said, okay, we're going to deal with this issue. Now, there's that notion that I will just be delisted from CRB. But the government comes and says, we're going to give you 6 months. Work with the person that you borrowed from. They'll create a framework to make sure that at least you're repaying. And also you are discounted, sort of to incentivize you to clear yourself from the CRB list. What do you take of this move by the government?
It's an excellent move. One, because government has been quite supportive of the CRB mechanism. You know, the temptation or the expectation of many is that the new government was going to probably remove the whole concept. That would have been terrible for this country, because this country is respected and ranked very highly across the world for the efforts that we are making around the CRB framework. Many investors look to see a number of criteria before they move into a country. And even if they are not coming as lenders, they're just coming as investors, they need to understand the infrastructure, the credit and financial infrastructure of our country. And where there are no credit reference bureaus, a number of investors shy off. So this government has been very sensitive. I think they know the importance of the CRB, but they have been very, very concerned about the misuse of the CRB, especially by lenders who simply do not want to entertain a borrower who has a negative score in the bureau. So that's a big plus for the government. They have not accepted this blacklisting of CRBs. You know, people have treated CRB as such a negative thing that when you see CRB, you want to kill it. But this government, I think, has been extremely supportive. Second thing that I appreciate about this new move is that borrowers, as I said, you need to balance. Borrowers need some sympathy. There are borrowers, especially in the context of COVID. Before COVID, I don't think such a discussion would have been really appropriate to try and repair, you know. But in the context of COVID, it is a perfect arrangement. So those who are being given an opportunity here are, at least for now, it is the digital borrowers who took short-term loans and were affected very adversely by COVID especially. And the empathy of government here is to see, can we give them an opportunity to improve their score? Maybe the lender would not have given them such an opportunity, but government has intervened, engaged with the lenders so that we can restructure. There was restructuring in 2020 of many, many loans, but now we have come to the micro loans. We've come to the micro loans, and government is saying, take advantage of the next 6 months.
Yes.
The lender will give you a discount on your credit, on your outstanding loan. That is a fantastic offer. So if you get 50% at least of your loan discounted, you won't ever have to pay that. I think that's a great offer. And then on the balance, pay it over 6 months. At the end of the 6 months, you should have repaired your credit history. Even now, there is repair if you take the 50% offer quickly. There is an immediate reclassification of the credit. So that improves the score.
What do you think these digital lenders are thinking? That is close to 15 billion shillings, just what they were owed, letting that go.
I think they need to embrace this for this reason, that money was difficult to collect anyway. What's the point of having huge figures in your balance sheet that you cannot collect? But when you give a good incentive, you collect half of it, I think they should take it positively.
Okay.
Remember, these are non-performing loans.
Yeah, they're NPLs. So better get something rather than nothing.
Rather than nothing. Yeah.
It's a tough one for the lenders. I can feel them.
Yeah.
And right now, even with these digital lenders, the regulator has been, giving them permits to operate. A number of them have not yet received.
Correct.
Yes.
It's important to clarify that the program that the central bank announced recently is not really yet to all digital lenders. This is digital. These are commercial banks, microfinance banks, and mortgage finance companies that offer digital credit. That's where this program is targeting at the moment.
Okay.
So those lenders have had a conversation with government and they have agreed on this. So it is not something that government is imposing on them. It is not yet, at least for now, a conversation affecting the other digital lenders that were, for example, applying recently for licenses.
This has been quite an enlightening conversation. Mr. Jared Getenga, CEO, Credit Information Sharing Association of Kenya, popularly known as CIS Kenya, saying that it's important. Credit information is actually a critical block, the cornerstone when it comes to improving the credit, the credit environment of the nation. And he says that in this period where small businesses are rating, formalize your business so that it gets its own rating, different from your scoring. And that helps businesses grow. You're able to acquire credit. But most importantly, on an individual level, he's touched on the, credit repair framework, which is also very important to make sure that people are given an opportunity to get off CRB. Well, that's been our conversation. I'm Noki Kimboy. I leave you with the markets.